Yes, at the MPC last week, the central bank governor expressed the MPC actually considered and expressed concerns regarding inflationary pressure. This is on the back of inflation for December coming at 11.44 compared to 11.28 that we had previous month. Basically, there's the flooding that we had, of course, last year for food inflation. That was a major concern. Then basically political spending ahead of the election. That, again, was a key factor. However, the bank has been able to manage this with aggressive, like we said earlier, OMO auctions, which we've seen from December right into January. This week, like you rightfully mentioned, there was OMO auctions daily, right from Monday through till today, seeing a total of 1.31 trillion offered and about 736 billion mopped up from the market.
That is quite aggressive. Tell us how that has impacted on system liquidity, money market rates, and of course the fixed income market space.
Yes, we started the week roughly at about 275 billion system liquidity, but that had not considered retail debit. So by the time that came in, liquidity tightened. At the overnight and OBB, we had rates at about 25 and 27% at the beginning of the week. Currently, rates have moderated to 12-13% at the overnight and OBB. During the course of the week, we had maturities, about 381 billion that came in. Basically, that was the main inflow we had. Okay, we also had some coupon payments for the 2026 and 2030, bringing in about 38 and 29 billion into the system. But basically, at the fixed income, we saw traders selling at the short end for liquidity, and at some point, they were also buying at the long end. Rates at the fixed income market range from 10.58 to about 15%.
Talk to us about the bond calendar. At first we heard that it was going to be postponed to next week, but then it was released yesterday, and we're seeing higher offerings from the DMO. What are your thoughts on the calendar for the first quarter of this year?
It continues to indicate that on the fiscal side, government is becoming concerned about increasing debt levels. However, there will be about 150 billion next week, which will be at the auction. And we just see that being something moderate. We see government on the fiscal side trying to reduce borrowing and focus more. Again, taking it back to the MPC, the central bank governor noted the 2.8 billion that was raised last year, November, at the Eurobond auctions. That is still part of what we see about government trying to restructure its balance sheet to focus more on lower or cheaper sources of borrowing.
What can you tell us in terms of what we can expect for next week, talking about the yield curve?
On the yield curve, you'd see, I will look at liquidity. There will be FAC that should pump in a significant amount of liquidity into the system. Also, the bond issuance I've talked about, that would look to mop up some of the liquidity. We also have retail refund, so we expect a lot of liquidity in the system. We expect the central bank to continue its mop up, and looking at the OMO rates at 11.5, 13.5, and 15 across the buckets, we expect the yield curve to continue to shape around those levels. We don't see any barriers being broken next week.
Okay, let's move over now to the FX markets. Talk to us about how that has fared this week, how the Naira has performed against the dollar.
Much credit can be given to central bank again. Looking at FX, I&E window has been stable at 362 levels. We've not seen trades outside that range, at least on closing price basis. Although there's been a bit of pressure at the parallel market, seeing rates going as high as 364. Again, this can be attributed to concerns that a bit of buying, a bit of increased demand ahead of election concerns. But again, we've seen a lot of inflows. Last I checked, we had about 56% of inflows coming into the market this January compared to about 21% of total inflows in December, 56% coming from foreign sources, while 21% was what we saw in December. So that shows that there's still a lot of confidence from the foreign investors, even ahead of the elections. After the elections, we hope it can only get better.
Do you think that the CBN is hoping that these inflows will outweigh demand at the market? I mean, if that doesn't happen, is the CBN still, regardless, still prepared to meet whatever levels of demand we see at the market?
Yes, they are very equipped to continue with the home auctions. Reserves have also began to grow gradually, staying at about 43 billion last I checked. Crude oil prices have been stable at 59 to 62 levels, although the concern about this year is that there might be a bit of volatility in crude oil prices. But we'll see how it goes.
Okay, we'll keep our fingers crossed. Wale, thank you for your time today.